Today, Bitcoin rallies after a wild weekend of losses. Half of Bitcoin holders are still making a profit even amid crypto winter. And Jeff Dorman of Arca discusses today's rally and whether it can last. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto markets are making a comeback today after a volatile weekend. By noon Eastern, Bitcoin was worth around $21,000, up from the lows of about $18,000 on Saturday. Ether, meanwhile, rose to just under $1,200, and Polygon traded around 44 cents. Let's talk about some of the top stories. First, crypto lending firm Celsius, the company behind much of the crypto drama, last week is asking customers to give it more time to fix its withdrawals. The company said it needed more time to stabilize liquidity and operations after it halted some transactions last week due to, quote, extreme market conditions. In a blog post, the company said it would continue to work with regulators and officials to, quote, find a resolution. Next, internet infrastructure business Cloudflare suffered an outage this morning that took down several crypto exchanges with it. Users of FTX, Bitfinex, and other exchanges were met with server errors. Crypto sites weren't alone, though. Discord, DoorDash, Shopify, all facing slower response times before Cloudflare fixed the issue around 2 hours later. Finally, despite the wild sell-off in crypto in recent days, many Bitcoin holders are still in the green. Data from Glassnode found that more than 50% of wallets are still worth more than when they bought Bitcoin. But the good news may not last, as multiple crypto analysts tell CNBC that the latest crash wasn't deep enough to find a bottom. For our main story today, Crypto World's Tanea McKeel spoke to Jeff Dorman of Arca about last week's crash, Bitcoin holders' profitability, and whether the sell-off will continue.
How bad was the sell-off last week, historically speaking?
Sure. Yeah, it's funny you jump right into crypto winter. I'm not even sure what that means, even having been in this space professionally for 5 years. But yeah, last week was bad. I mean, it was not unprecedented in the sense that we've had certainly multiple times in digital assets young history where we've had 30 to 50% moves in short periods of time. But I think it was historically bad in the sense that it was really the first time it was happening in conjunction with bad things happening everywhere else in the world as well. I mean, oil dropped 9% last week. Gold was down 2%. The S&P was down 5% for the second week in a row after yet another FOMC-induced head fake. I think Monday alone was the third day since 1962 where both 10-year treasury yields rose more than 20 basis points at the same time that the S&P fell 3.5%. So, suffice to say that everything going on in global markets is pretty unique right now, and digital assets is no different. I mean, we had basically full-scale liquidations across major financial institutions within digital assets, along with a lot of fear because they're not transparent and we just don't know where the bodies are buried and who's going to be next to float to the surface. And that leads to a lot of contagion. It leads to a lot of de-risking. It leads to a lot of deleveraging, which obviously leads to lower prices.
I have to ask, what does the word crypto or the phrase crypto winter mean to you? Because it is something that's thrown around a lot and has been for, let's say, a few years now. What do you think of when you hear that?
Yeah, I think the same thing as I think about when I hear the words bull and bear market, right? Somebody arbitrarily decided that a bear market in equities was a 20% peak to trough decline. Like, okay, but it feels pretty painful if you're down 19% as well, right? I don't know why 20% is the number we care about. And same with crypto winter. It feels pretty bad right now. I don't know what defines it. I don't know if there's a length in time that it has to hit. Don't forget that in 24/7 trading, 1 year in digital assets is the equivalent of 6.5 years of the equity market in terms of just the hours of operations. So, a 3-month swoon could be, the equivalent of a 2-year down trade in equity. So, I don't know, again, what defines these things. I'd say most people in the digital asset space are prepared to hunker down right now, right? That means, probably less growth from the growth companies in the space in terms of hiring and new product launches. It probably means less news and less events and less catalysts coming out of the projects, and instead more building and more shipping product. Generally, if this is a time period of crypto winter or whatever that means, it generally means that there's a spring on the other side, which is really what matters most. 5 years ago, I remember sitting here in 2017, 2018, wondering if this industry was ever going to bounce back. I don't think there's a single person in this industry or even outside of this industry who actually believes that at this point, right? There is real product market fit. There's real success stories. There's real reasons to believe that there will be a spring. It's just a matter of when and how deep the cuts are before that happens.
Talk to me a little bit about the strength being shown in the DeFi market, especially amid this quote unquote crypto winter. What are you seeing?
Yeah, I mean, DeFi, without mincing words, has been flat out amazing. I mean, it's absolutely crushing any of its centralized counterparties in terms of not going down, not having any issues. I mean, you look at all the failures right now in the market, right, from Celsius to Three Arrows to Terra Luna. I mean, these were centralized players and companies, not DeFi applications. The DeFi applications themselves, whether it be decentralized exchanges like a Uniswap or a SushiSwap, or a decentralized lending application like a Compound or a Maker or an Aave, or decentralized insurance like Nexus Mutual, or decentralized asset managers. The protocols are working. There's no downtime. There's been no coming offline or trying to bail out any of their counterparties. They're working as designed. And I think that most of the people who actually pay attention to the space recognize that this is a pretty big turning point for DeFi, right? DeFi works. Now, the issue with DeFi, in my opinion, is not the applications themselves, it's the end product, right? I can go do some amazing stuff in a DeFi lending application, right? I can go post my Bitcoin as collateral, take out a loan in USDC, and that works amazing. The problem is nobody accepts USDC. I can't go pay my rent with USDC. I can't go pay a vendor with USDC. So the issue is the adoption of the end product, the stable coins or the assets that we need to fix, not the DeFi applications themselves. And I think once we get that, once we start to get a world where all of your assets can become on chain. You can take your home equity and use it as collateral for a loan. You can take your jewelry or your car or other valuable assets, and those become on-chain collateral. And then vice versa, the stuff that you take out, your Ethereum, your USDC, your USDT, when we can actually start spending that and using that, I think people are going to flock to DeFi much faster than anyone expects because, again, it works, it holds up. There's nothing inherently wrong with the applications. It's just that there's not enough use cases for DeFi end products outside of DeFi itself and trading.
All right. So how long is this road ahead for investors? Do you have an outlook in terms of a recovery for crypto?
Yeah, it's a good question. I mean, like I said, I think the one difference between this and 2017-18 is that I have absolutely 100% confidence that there will be a recovery and that most of the assets that are good projects and have good tokenomics will in fact hit all-time highs again. I don't have any visibility into how long that takes because we've seen things like March 2020 where it was the most hated bull market for 6 months. I mean, I remember writing that in August of 2020 that people were still mad that prices were higher because they were expecting a longer bear market that they could buy in. Whereas 2018 was the opposite, right? People thought it was going to be quicker, and it ended up being about 18 months. So, my guess would be we probably start to see higher prices for the second half of this year. Again, there really isn't a lot of carnage in the applications themselves.
That's all for today, but you can find that interview and a lot more over at cnbc.com/cryptoworld. We'll be back again tomorrow, and we'll see you then.